All right. Hello, everybody. Again, this is a TVFCU seminar we're doing online. Want to introduce myself again. This is Brian Fryer. I'm the sales manager in the real estate department here at TVFCU, and I have one of our mortgage originators with us this morning. It's Wendy Carter. Good morning, Wendy. How are you?
Good morning. How are you?
Doing great, doing great. Everybody, Wendy is joining us from Cleveland, Tennessee, just a little bit north of downtown Chattanooga. I'm downtown in the main office at 535 Chestnut Street at TVFCU headquarters. So Wendy and I are going to join you today, and we're going to be talking about jumbo loans. Everybody hears about a jumbo loan. It's kind of one of those mystery products out there. Unless you've ever done a jumbo loan, purchased a jumbo loan home. A lot of people just really aren't aware about, what is entailed in a jumbo loan and actually what they are. So we're going to talk about that. And also we have some questions we're going to be answering too. Wendy's going to help me along the way. So if I stutter or get caught up, Wendy's going to be here to back me up and help me out here. So basically, we'll start with the definition on jumbo loans, and then we'll talk about, the process too. And Wendy and I are going to be discussing that and what you need to do if you're interested in a jumbo loan, and type of documentation. We'll be talking about loan to values and down payments and interest rates. So we've got a lot to cover today. And then we're going to be ending with a drawing for one of our listeners today. Everyone that has signed up, your name's being put in the hat for a drawing for a $100 gift card, Visa gift card. So I've got a lucky person out there. We'll be drawing here in a little while. So let's just get started. Well, first off, let me do a little bit of background about myself, and then Wendy's going to tell me a little bit about herself. I've been in the mortgage business about 23 years, roughly. Done everything from origination to managing on the sales side. Been at the credit union since 2008. So love it here. It's a great organization. Of course, everybody knows that being a credit union, we are member owned. So we give a lot back to our community, and of course we cover the Southeast Tennessee, North Georgia area. If you aren't a member, please do so. Become a member of the credit union. We are a full service financial institution with checking, savings accounts, or as we call them, share and draft accounts. We also do commercial loans, business loans, and as everybody knows, we do our consumer loans, car loans, what we're known for, but boats, RVs, signature loans, and of course, in our area, mine, Wendy's area, we do mortgage loans, and everybody knows, we run the full gamut. We are very competitive on our rates and our products. But Wendy, if you would just tell everybody a little bit about yourself and your background.
Yes. Okay. So I have been in the mortgage business a little bit over 25 years. I have primarily been in the Cleveland, McMinn area. Been with the credit union since 2019. Love being here at the credit union. Love getting to work with members. The mortgage business has its ups and downs, but definitely this is a great department to be in here. So.
Yes, it is. Yep. Yeah. And I know Wendy and I have talked about it. I guess we call us seasoned veterans in the mortgage industry, and we've seen the ups, we've seen the downs. It's been I can't say ever since COVID hit last year, it's been an very interesting year. Nothing like I've ever seen. So
little different.
Yeah, it is different. But still, it's an exciting time. Mortgage rates are super low, historically low. Lots of people trying to find homes, limited market as far as availability of homes now, but people are still, I'm getting contracts in. Wendy, you're seeing purchase contracts come in, and people are buying, selling homes, refinancing. So it's busy times. So, let's start out with some of these questions. I think one of the main questions we got emailed to us is, what is a jumbo loan? So this is kind of knock a little bit of that mystery out. Jumbo loan, as defined from Investopedia, says a jumbo loan, also known as jumbo mortgage, is a type of financing that exceeds the limits set by the Federal Housing Finance Agency, and that's FHFA. So it, unlike conventional mortgages, jumbo loans are not eligible to be purchased, guaranteed, or securitized by Fannie Mae or Freddie Mac. So basically, it is a product that's going to be a specialty product for most lenders. Here at TVFCU, we do jumbo loans. Of course, that's why we're doing this seminar here. We do keep those in-house. We call that a portfolio product. So it's not something that's sold off to an investor. So those loans are kept in-house. Now, what makes a jumbo different from your standard conventional loan is going to be your loan amount. Okay, since FHA sets that limit, the current limit is $548,250. And as Wendy, she knows this too. That jumbo loan limit was set at $417,000 for many, many years. It just stayed there, and you just knew what the jumbo loan limit was until a few years ago. FHFA decided to change it. What, about every 6 months, sometimes every 3 months, they would increase that limit. So I know I'd have to get to, okay, what is that limit today? So it has changed. So currently $548,250 in most states. Some states can be different. I think Hawaii and Alaska, it is a higher amount. So just, everybody please be aware. But I know Tennessee, Georgia, et cetera, $548,250 is the jumbo loan limit. Okay, so that accounts for the loan limit. Now, that being said, what are the qualifications for a jumbo loan? Generally, on jumbo loans, you are going to have a little bit more as far as what we call a credit record. You're going to have to show more trade lines, more history of credit. It might not necessarily be a loan for a first-time home buyer, to be honest with you. Okay, we're going to really be looking at the overall credit, your credit history. Also, too, and we'll get into income documentation here in a second with Wendy, but it's going to depend also too on income. Your debt to income ratios, which is a standard qualification for any type of a loan. And I'm just going to kind of hand it over to Wendy here a little bit. When talking about income, what are you seeing as far as different types of borrowers and their income and documentation they might need?
So basically what you're going to need is your standard 2 years of W-2s, recent pay stubs. If you're a self-employed borrower, we're going to need your last 2 years of tax returns with all attached schedules. So it's just really typical documentation, but it's documentation we've got to have to be able to get started.
Yeah. Excuse me, just 1 second. My screen blocked out on me here, and I've got to pull up some information here. Bear with me, everybody. Technology is great, but sometimes it can be a little bit tough here. Let's see. Okay. Well. Okay. Sorry about that. So that's on the income documentation. What we would need, again, it's going to be pretty standard based on a standard conventional loan. Same for jumbo loans. Everybody always asks, what are your limits as far as debt to income, et cetera. Well, generally, the debt to income ratios are going to be set at, you don't want to be above 43%, and in some cases they can go above that. In a perfect world, you want to be at 36% or less, and what that means is your monthly debts, what your minimum payments are, credit cards, any other homes you might own, car payments, et cetera, those monthly debts, as opposed to your gross monthly income, whether you be self-employed, a contractor, or if you work for a company and receive a W-2, pay stubs, et cetera. Next item, and some of our questions is, what are the down payment requirements for a jumbo loan? And I'm going to kind of run over these, and those that are listening may want to jot these down. We will do up to 3% down payment with a purchase price of $750,000 or less. Okay, so the jumbo limit, if the purchase price is above $548,250, or your loan amount is going to be, and let's just say your purchase price is $750,000, we're going to only require 3% down. Okay, and before I start going in more detail about down payment, Wendy, if you just want to talk about what funds can be used for down payment.
You've got several different sources, of course. Seasoned funds, primarily. They're going to want to see that those funds have been seasoned for at least 2 months in your bank accounts. Proceeds from a recent sale. There are, let's see, what else is there?
They can use funds from retirement.
Retirement, yes. Pulling out of your retirement account, your 401ks. So, there's several different options to come up with your down payment requirement.
Yeah, and as Wendy said, it does need to be seasoned, it needs to be sourced, it needs to be sitting in an account for over 2 months. If it's less than 2 months, we have to have a paper trail where those funds came from. Sometimes people will sell an automobile or something like that. We will have
Mhm.
to source those funds. Sometimes people may take a loan out against other property. Either an automobile or another land loan or something like that, and take out funds to use those funds as their down payment too.
Which in
Again,
most cases, it doesn't have to be seasoned because we're going to
yep,
be able to document by your closing disclosures or whatever. But
correct. So there's a lot of different ways to source those funds. Um, let's say your loan amount is going to be larger in your purchase price. Let's say, hey, I'm looking at purchasing something $1 million property, which is not hard to believe nowadays, especially with property values going up and
wow,
sellers are getting higher prices for their property. So $1 million, we will go up to 95% of the purchase price or appraised value, which is ever's less. So that's 5% down. Um, and that does require at least a 680 credit score on both of those. So the 3% down or the 5% down. Um, if you have a 720 or better credit score and you're looking at a home of 1.5 million, we'll only require 10% down on that. So we are very, very competitive on our down payment requirements. If you find a home that's $2 million, we will only require 80 or 85% loan to value or 15% down. So that's based again off of purchase price or appraisal value, whichever is less. Okay. So very, very competitive. I know maybe some of our competitors may require 20, 30% down, but
wow.
TVFCU is much more competitive on ours. We do have fixed rates on our products. We have a 30-year fixed rate, a 20-year fixed rate, a 15-year fixed rate, and a 10-year fixed rate. And everybody knows, or if you don't know, if you want the lowest interest rate, generally you're going to have to take a shorter term, just because risk. That's one of the things that a lender looks at is risk, and a shorter term loan is considered less risky. We also have an adjustable rate product too. It's called a 10-1 ARM. It's a 30-year loan. It's only fixed for the first 10 years, but that's a great product too. Our rates right now, starting out 30-year fixed around 3.25 right now. Purchase on rate or rate term refinance. We also do cash out refinances on jumbo loans too. We will go up to 90% loan to value based on the appraised value. So that's something some of our members or potential members need to know. The interest rates can be a little bit higher on those cash out refinances because they are considered a more risky loan. Um, and of course, we're going to be looking at credit score. We're going to be looking overall credit. And then this kind of leads me to my next thing. And Wendy can attest to this. People ask, what's the first thing I need to do? I always say, set a budget, know what you're looking for, and what area, and then get pre-qualified and also have a good realtor. Wendy, if you want to kind of just explain really short about the pre-qualification process and what you're seeing right now from borrowers.
Yes, it's really important right now to be pre-qualified. So when you go in to do those offers, that's immediate. What those real estate agents are having to pass on to those listing agents is to show that they've already got a borrower that's went through the process, already pre-approved. And it just so happens that we have the best system to get pre-qualified. Basically, you can go online, you choose what originator you want to work with whatever area you're in, and actually you get to apply online. It will download back to us. We'll call you, reach out to you, go over the whole process. We'll see exactly what program best fits your means, and then basically we're ready to pass on that pre-approval letter for you, and it makes your offer a whole lot better
Yeah.
when they know that they've got a qualified borrower coming in.
Yeah, especially in today's market and everything, and we look at every pre-qualification. It's not run through an automatic system. We have human eyes that look at it, and
Right.
and Wendy's there in Cleveland. I'm here in downtown, but this is something I just want to reiterate. All our decisions are made locally here at the Credit Union downtown Chattanooga, and our products are geared for our local area and our local community and our membership. And Wendy, if you would tell, if somebody applies online and they're wanting to get pre-qualified, generally, how long does that take?
I mean, usually that day. I mean,
Yeah.
as soon as I've got an application that hits, I work through that before I leave for the day because I know how competitive it is right now. I've had so many borrowers reach out to me and say, I've got to get pre-qualified. They won't even let me see the house.
Yeah. Yep.
So, it's tough out there. So,
Yeah. Yeah.
get all this done up front so you're ready to go.
Yeah, a little bit of planning ahead of time, and especially on the jumbo loans too, because your sellers, they're going to be they're going to want to make sure that that buyer is serious and they've got that letter in hand. And also too, I'd highly recommend using a good realtor, local realtor. If you don't have a realtor, talk to friends and family. Call Wendy. We can recommend some great realtors we work with in the Cleveland area, the Chattanooga area.
Yeah.
Definitely want to work with a good local realtor that knows the area and the market, especially when it comes to jumbo loans. They will know where to look, what area you're looking at, where you plan to go. And then I was going to get back to our interest rates and everything, and our loan to values and what all is entailed in that. The down payments and everything, those funds do have to be in your name, and you do have to source those, and they do have to be, in some cases they have to be seasoned. Also too, when you're talking to your originator, we need to talk about closing costs, and who's going to pay those closing costs. And when if you just want to kind of talk about closing costs and who pays for those.
Right. Basically, you've got closing costs that have to be paid outside of your closing. So on a purchase, it's not something that can be rolled back into your loan. So that's something that you need to go into your negotiations saying, do I have these funds set aside to be able to pay this? Or am I going to have to try to get this negotiated into my price where my seller is going to contribute to some of those closing costs as well?
Correct. And that's something that you'll want to talk to your originator about too. And of course your realtor, what your plans are, and be using those funds and who's going to be, taking care of which funds. And just mentioned, it being a much more competitive market, we're seeing sellers aren't as apt to pay for closing costs. And sometimes they will, sometimes they won't. But to just be prepared, down payment is one thing, but also closing costs. Who's going to pay for those? Now, Wendy had mentioned on a refinance, kind of explain to us on refinances how that works, closing costs and equity and all that good stuff.
Exactly. So on a refinance, you can actually, as long as you've got room loan to value wise, you can roll your closing costs back in so you won't have funds out of pocket to be able to do those refinance transactions.
Correct. And there are sometimes a borrower, I've been told, hey, Brian, I want to keep my loan amount, as low as possible. So I'm going to pay for my closing costs out of pocket. Again, those funds do have to be sourced and seasoned, but yeah, it's very possible. It's not many people that want to do that, but sometimes we do get that.
Right.
And also too, escrows. Escrows are required in some circumstances, especially if you don't put 20% down. Down payment. And again, talking about down payment, you can put as much down as you want to. Actually, the more you put down, the better, because you can get a little bit better terms sometimes, or better approval too. If something is, credit may not be the best sometimes, or may not, be top tier. If you're putting more money down, you're basically putting more skin in the game. You're taking on more risk, and that looks better to the lender. So that's something that you want to be aware of too. But again, I know most people sometimes they don't want to use all their funds for down payment. Just want to try to maybe put the minimum amount, of course, and that will too, just as long as you qualify. The next thing I kind of want to talk about is jumbo loans. Is what types of properties and stuff like that. We look at any type of property. We will look at condominiums, single family homes, and in the Tennessee, Georgia area. We do lend in some circumstances outside of Tennessee and Georgia on jumbo loans, but we'll need to know where the area is and what type of property and everything that you're interested in. And as far as the process and everything right now, everybody knows that it's pretty busy in the mortgage industry. What are you seeing right now, Wendy, as far as like turn times in TVFCU and from competitors?
Right. Basically what you're looking at from the beginning to the end. You're a good 30 to 45 days out. And basically that's because all the appraisers and all the title companies are just overwhelmed right now. So it's taking us a little bit longer to get that title commitment back in or get that appraisal scheduled and get back in. So, we're seeing purchases push out a little bit longer than 30 days, but we're trying to get it done within those 30 days. But
Yeah. Yeah.
refinance, we're definitely going to be in that 30 to 45 day range.
Yeah, yeah. I would also too, if you're planning on, getting pre-qualified, or once you've gone through the pre-qualification process, is Wendy can give you, or any of our originators can give you a list of items that you'll need to be getting together. I would recommend getting those items together, having those ready for whenever you sign the contract and you're ready to go. Being prepared, W-2s, last 2 years, pay stubs, tax returns, bank statements, anything like that. And also too, if you're shopping, you want to go ahead and talk to your insurance agent too, about homeowners insurance. You want to nail that down and make sure the property you're buying, you can get enough coverage, and what that cost is going to be.
Right. And that way we're able to give you, an even more accurate payment of what you're going to be looking at. And like you were saying on those documents, your W-2s, things like that, go ahead and send them to us. I'm loading them into the file. So basically when I get a contract, I plug in that and we move. So,
time is of the essence.
Yeah, send all that now. We'll build your loan port and, we get that contract, we're going.
Yeah.
So.
Yeah. And when we try to move as quickly as possible. We do have to depend on appraisers and title companies. We use all the local title companies, great partners we have. Appraisers, as Wendy was talking about, they are backed up a little bit, just because mortgage rates are low. It is the home buying season. We're in spring right now, about to go into summer. So just everybody be aware, whenever you're looking at timelines and you're talking to your realtor, make sure you have your documentation ready. That way, when you do get that signed, executed contract, we can move on that as quickly as possible. There aren't any further delays. So I'm going to talk a little bit about the process, and this goes for jumbo loans as well as any other type of loan. If you get pre-qualified on a purchase and you have your purchase contract, and Wendy has already pre-qualified you, you'll want to get that to her as quickly as possible, along with all your documents if you haven't already sent those to her. And then she's going to have you sign initial disclosures to get everything started. And once we get those back, the loans be turned into a processor who is going to order your appraisal, title work, verifications of employment. Also, too, one of the things we have to do is check and see if you live in a flood zone, or the property is going to be in a flood zone too. Everybody knows if you do live in a flood zone, the home's in a flood zone, that flood insurance is going to be required. We don't see that a whole lot, but we do in some areas. Just depends. That's where you'll want to do your homework, and also check with your realtor too about the home where you're purchasing, because a lot of times you'll know ahead of time if it is going to be in a flood zone. So very, very important. And once we get all that back, that information is going to be fully underwritten by one of our local underwriters. And hopefully they won't need any more additional documentation. If they don't, then they issue a clear to close, and it moves to closing. And we get with our title company partners to set up the closing and time and date and everything, to sign everything. Refinances. I want to mention that too on refinances. This goes for jumbo loans as well. Once you have your closing set for your closing on a refinance, whether it be cash out refinance or no cash out, there is a 3-day right of rescission after you close, which means you do have to wait for 3 days, business days, doesn't include Sundays or federal holidays, for that loan to go into effect, and any funds you'll be getting to be available. So everybody, please be aware of that on a refinance, whether it be jumbo or standard. Another question was asked, do people who are self-employed and have W-2 income qualify for jumbo loans? Again, it's going to be the same as a standard conventional loan. We are going to look a little bit closer at debt to income ratios, just simply because jumbo loans are considered a little bit more risky loan for the lender. And people ask, what makes it risky, Brian? Why is it risky? Well, it's a larger loan amount. So if that loan does default, then that is, as far as the lender's concerned, that's a big chunk taken out of loss there. So So that just be aware, they're larger loan amounts, and that's why it's more of a risk for the lender. And then again, I talked about earlier, first-time home buyers getting jumbo loans. It's possible. I'll be honest with you. Just going to depend on your overall credit profile, and how much experience you've had at having larger loan amounts and being able to make payments on those. Having a history, basically, is what we're looking at. It's one of those kind of things that's, especially when it comes to underwriting, it has to make sense, kind of thing. So, based on income and history and all that. Another question was asked, and Wendy, you can answer this one. Would TVFCU allow me to use equity in one property as down payment on another property for a jumbo loan?
Absolutely. As long as you're going to qualify with both of those payments, absolutely. We can look at doing a home equity line of credit or a cash out refinance on a property you already own to use as your down payment requirement for your new jumbo loan. So yes, absolutely.
Correct. And in any type of loan that you take out on some type of property or something you own, you do have to own that. So can't take out a loan on a cousin's vehicle to use as down payment. So it does have to be yours. So basically, what we're looking for is your skin in the game. It's what you're bringing to the table that you have that you can to put in there as far as offsetting the risk and everything. And another question was asked: a 30 or a 15-year loan better? And this goes for pretty much any loan, whether it's conventional or jumbo or anything. My opinion is it's going to depend on your situation. 30-year loans, the interest rates are higher, but your payment's going to be lower because it's a longer term. A 15-year loan, your interest rate's going to be lower, but your overall interest for the term of loan is going to be a lot less. Plus you're going to have an asset that's paid for in a shorter amount of time. So again, that goes back to planning, and you'll want to talk to Wendy or any of our other originators about what your plans are and what you want to do. Let's see here. What's the best way to start building equity fastest, Wendy? You get any hints or tips for anybody about building equity?
Building equity. Basically, you can do extra principal payments, and that builds it really quick.
That builds it fast. Yep.
That builds it quick. Home improvement items, that always builds your equity, because you're only making your home appreciate. So, when it comes to that time, you've got more value invested into it. So, yeah,
exactly. Let's see here. How does a jumbo loan affect credit? Doesn't necessarily affect your credit, but as far as like credit scores and like that, it just shows, especially if you're making a payment over 12, 24, 36 months, just shows that you make them on time. Of course, you don't want to be late on those. Just shows that that you have the ability to be able to handle that payment, and you are a lesser credit risk. So that's how it does affect your credit over time. And when it comes to jumbo loans, it's not necessarily the amount of the loan or the type of property. It's your overall credit profile, debt to income, etc. And most of your jumbo loans, or your properties, are going to be your higher end. More luxury type properties, larger square footage, maybe more acreage on the property. We've seen some gorgeous jumbo loan homes here. Some very interesting ones too. But with the property values going up the way they are, we're starting to see more and more of those in the Chattanooga, North Georgia area, Southeast Tennessee, Nashville, a very fast growing area, one of the fastest growing areas of of Tennessee in the United States, actually. What are you seeing any mistakes by any borrowers, just off the top of your head? We could be jumbo or just regular conventional in the purchasing area.
As far as like what?
If they're the types of properties they're looking at, or I know here recently we have had seen a lot of issues with property values, appraisals not coming in matching.
Well, yeah, that's been a little point of contention here, but So yeah, again, it goes back to what you said before. It's so important to have a qualified real estate agent that's helping direct you into that purchase, because they're going to know if that property value is going to be in that market, if we're even going to be, so yeah, that's probably a good thing, like you
Yeah.
said.
Yeah. That's the one thing I've noticed, especially now, it's gotten really heated and
Right.
people, and be prepared for that too. And that's something you want to talk to your realtor about, and you want to talk to your mortgage originator about is,
Multiple
and
offers.
be honest with us, and because
Yeah.
we're gonna see, we're gonna eventually see it when the appraisal comes in, if that value hit or not. If it doesn't, then either you can renegotiate, or if you really want the property, you will have to come up with those additional funds to make up the difference. In some cases, I don't know, but personally, I'd recommend that. But with the market the way it is, and you
Right.
found a property and it's a good deal, you think, then that's something you definitely want to discuss and see, but do be prepared for that too. Because
Yeah, several different transactions with, real estate agents and borrowers where there's multiple offers going in.
yeah, we're seeing, I think the last I heard of one was 19 offers in less than 30 minutes on one property that came
Wow.
available. And of course,
Wow.
it's 5,000 above list price, 10,000,
Wow.
20,000.
Yeah.
So we're seeing that
Yeah.
a lot.
Where you see that
Um,
clause wrote into that sales price of we're going to pay any deficit on the appraisal. It's like you already knew there were multiple offers that went into that
yeah,
for them to get that. So yeah.
yeah. Main thing is, like we were talking about, be prepared, have a good realtor, good mortgage originator, get pre-qualified, have a plan, get your documentation ready.
Right.
It's pretty basic. We'll try to, Wendy's great, walk you through the process, make it as painless as possible, and get you closed in that 30-day mark, hopefully, if it's a purchase. So we're going to go ahead and wrap everything up. I'm going to give out my or TVFCU contact information, how you can apply with us. And then when I get done, Wendy, if you got your own information, if you need to reach us here at TVFCU, we can be reached at 423-634-3667. And that's going to be the real estate department here at TVFCU. Or you can go online to tvfcu.com, apply for a mortgage loan. You'll see that in our link. If you follow that link, it's going to take you to a link for our team. You can see all of our mortgage originators and which areas they cover. Wendy being there in the Cleveland area. She covers Athens, the area around there. But also, Wendy, you do loans in Chattanooga, North Georgia, and
Everywhere. Yes.
Nashville. I mean,
Everywhere.
so yep, Wendy can do a loan anywhere for you if need be. But we also want to make sure that too that you do qualify for membership if you are not already a member, and that's also on our website too. So Wendy, if you want to give out your contact information, if anybody needs to get a hold of you.
Yeah, absolutely. My direct number is 423-634-3674.
Okay, great.
Mhm.
And Wendy, appreciate you being on here with me today and helping me out. I'm told we do have a winner for our drawing, and Ruth Whitaker. Congratulations, Ruth. You'll be getting a $100 Visa gift card, and we'll be in touch with you and get that to you. Everybody, we want to thank you for joining us today. If you have any questions, please reach out to us. You can contact me or Wendy or any of our mortgage originators. Be happy to answer any questions, especially specific to jumbo or any type of loan that you're looking for, mortgage loan or anything regarding that. Be on the lookout. We're also going to be doing another seminar next month. We're going to leave it as a surprise for right now. But these are a monthly thing. So if there's anything that anybody out there that wants to talk about when it comes to mortgage loans, let us know. We'd like to hear your ideas. My marketing department is always coming up with something. One of our ladies contacts me all the time. Hey, Brian, I got a great idea one of the members asked about. So this stuff that we're giving out to you in these seminars is coming from you guys. So we'd love to hear from you. And we're going to go ahead and sign off now. Wendy, thank you
Yes.
so much. Really appreciate it.
Kudos to our marketing team. We have the best marketing team ever. So
They're a great group. They're a great
yes,
group.
thanks for
Again,
having me. I enjoyed it.
you're welcome. Enjoyed having you. So we'll have you on again. But
All right.
everybody, thank you. Have a great week. Again, if you need to get hold of us, just contact us our website or give us a call. And everybody have a great week and be careful and have a great Memorial Day weekend. Thank you.
Bye.
Bye-bye.